Alright, what's good, everyone? Just wanted to go over some of the trades that we took this week, how I managed to pull out over 1,500 from my Eagle Effects account. This account is relatively it's around 370, and just roughly around there. That's kind of the threshold that I would pull out anything that I made on top. And yeah, I just kind of regularly withdraw 2-3 times per day. Most of the times the trades happen during Asia session, and like I said, it's a small account, so every time I'd get above that threshold 400, I would just take out instantly, because it's crypto, so I could instantly send it over to my Coinbase and bank account. I was like, okay, I'm not trading prop firms anymore. I don't have to wait a week for my payouts, so I'm gonna instantly pull it out and start back from the threshold on the next trade. That's kind of what I did. And this week I took a few trades. Basically, I can give you guys an overview of what my model looks like. I was just teaching somebody my expansion model, and this typically happens around 9 a.m. in New York session. One of my trades is from the expansion model. Most of the other ones happen during Asia session, because that just happens to align with my schedule. That happens to be when I perform the best. But I guess I could dive into this chart first. So here I have marked out AMXD. This is accumulation, manipulation, expansion, distribution. I'm not going to go too deep into it, but basically at 9 a.m. I look for price to run into a 30-minute fair value gap. In this case, it was a perfect run into this fair value gap. Let's go to find that again. We got that perfect run into this candle, stayed up above it on the 30-minute time frame. There's the fair value gap. And on the lower time frame, I just looked for that confirmation. And that confirmation for me was just that order block on the 5-minute time frame. It formed right after it left the range, went above the high, tapped back into it, and that's where the trade was, toward these equal highs. That was quite the picture perfect trade right there. Most of the other trades happen during Asia session. This is what I love to avoid in Asia session, this kind of consolidation. That would happen if the bulk of the move happened before Asia session started. So we got this huge expansion. That was already the kind of pip range that we would expect Asia to run. And obviously it wanted to go higher, so instead of retracing, it just consolidated until New York session. But most of the other trades happen during Asia session, just like this. We would get the close of New York session open, and if I dive back into the price action right here, you can see that the new daily candle will open just about now. There you go, new daily candle opened, and my model basically from Asia session, it runs on the high that was created prior to Asia session. So there we have a high, right? And it's already Asia session, and we already got what we wanted to see. Basically this right here, this entire range. And the way that I trade is getting in the wick of the daily range, and we expect our trade to run and expand the daily body of the candle. And this right here is an indicator of the daily body. This is the trade that I would take. We have a fair value gap right here, a bullish one, which happened to be on the fake out move. Then once it closes below this becomes an IFVG, and price uses this. This is where I'd get my entry in right there. And we target the daily candle to expand towards the nearest liquidity, towards the nearest fair value gap. There's probably plenty of fair value gaps along this move on the higher time frames, and we would just expect that expansion from there. Right? That's kind of the basic overview of my Asia session model. That's kind of what I do. Every day I look for this sweep. If we get the sweep, I fake out move. And I'm kind of breaking it down on my ebook that's going to be coming out soon. There it is. Yeah, we have the breakdown of what happens during this session. We get the accumulation after the new day open, right? We get a new daily candle. Then we get that fake out leg, and a IFVG forms along the fake out leg, which is what we use to take our trade. That's going to be all for today's video. Thanks for joining me for the recap. See you guys next week.